Welcome to Retirement Ramblings. I'm Scott, and today is day 197 on my countdown to retirement. So, started out the day looking at some LinkedIn statistics while I was drinking a cup of hot tea. And per Fitch, for the last 24 months, the 60 plus day delinquency rate has been at the highest levels for those borrowers in the subprime borrowing group, while prime borrowers are just reaching the midpoint between high and low delinquency rates, and that's occurred over the last 8 months. So it appears that those consumers that rely on credit in both groups are now being challenged. And then I saw another one of these Gallup polls where it showed that 59% of U.S. adults have a retirement savings plan. You know, that could be a 401k, a 403b, or an IRA. And then they gave us really compelling statistics. 28% of households that earn $50,000 a year or less have a savings plan. 39% of people that have no college education have a savings plan. 58% that have some college have a savings plan. 65% of those households earning between $50,000 and $100,000 have a savings plan. If you are a college graduate, 81% of you have a savings plan. And then for those people earning $100,000 a year or more, 83% of them have a savings plan. I don't think any of these statistics would be a surprise to anybody. If you're making a lower income, you have less available cash to put into retirement savings. If you weren't given a financial education when you were younger, you probably didn't put money into one of these plans. I mean, it seems like common sense that these stats would flow from, you know, what you would just expect. Anyway, after I had a couple of calls and a bunch of emails and stuff I had to deal with, but then I ran over to Great Clips because they had a special that's running through July 14th here in the Atlanta metro area that you can get a haircut for $9.99, which is down from their normal price of $19. So there's a lady that I go to over there that, you know, I'm happy with the results that she gives me. So I called the local Great Clips to find out if she was working today. She was. So hopped on over there, got my haircut for, you know, $10 plus the tip. So I was happy with that. Excuse me. And then today was Fed Day. So I record Jerome Powell's press conference, you know, after the release of they usually release what the Fed's going to do at 2 o'clock, and then at 2:30 Eastern he gets on and has a press conference, and then, you know, a bunch of people, he reads a statement, and then, you know, they go into the Q&A session, and I love watching kind of the tick by tick of the market while he's talking, and, you know, when he says something that's, you know, catches the market by surprise or whatever, like it's up, it's down, it's like, you know, it's a play-by-play. I just love watching it while he's you know, giving his answers to questions. But I also take notes during it because personally I don't like listening to the various media outlets report on what he said, because I find that in most instances it's not accurate. So I wanted to get all the stats and build my own opinion while I watch it. So I'm going to look down a second so I can get some of these numbers correct, because I don't want to misrepresent them to you if you didn't get a chance to watch the presser. Okay, so he said that the median SEP projection of FOMC participants for GDP for full year 2025 is 1.4%, and that for 2026 they only expect it to be 1.6%. So I was like, that seems really low. So I went over to the Atlanta Fed's GDP Now tracker, which was updated today, to see what the current projected GDP is that we're running at. And it's 3.4%. So that means that the Fed expects a dramatic drop off in GDP in the second half of the year. So I was interested to hear that. Then he said that the payroll jobs number has been increasing at an average of 135,000 payroll jobs per month over the last 3 months, and that unemployment is running at 4.2%. He also indicated that wage growth is outpacing inflation. And then he said that the Fed expects the unemployment rate to rise from the current 4.2% to 4.5% by the end of 25 and to hold steady at that unemployment rate through all of 2026. He then went on to say that PCE inflation is currently at 2.3%, and the core PCE, which excludes the volatile food and energy items, is at 2.6%. Then he said that total PCE projection is up from March. So the Fed now expects PCE to be 3% in 2025, 2.4% in 2026, and 2.1% in 2027. So effectively, the Fed doesn't believe they're going to reach their goal until at least the end of 2027. They also decided to keep the federal funds rate the same at between 4.25% and 4.5% while they continue to run off their balance sheet. So then, some of the more important things, was the median SEP projection. This is the dot plot. So of FOMC participants for interest rate cuts remained the same as in March. That being said, the number of participants that indicated that they did not expect a rate cut went from 4 to 7. So even though the number of cuts is still expected to be the same as it was in March, more people are skewing to no rate cuts than they are towards the 2 that were projected back in March. And the Fed now expects that the federal funds rate will be reduced to 3.9%. That's the dot plot number at the end of the year, by the end of 2025. It'll then only decrease to 3.6% by the end of 26 and 3.4% by the end of 2027. So they're not looking for any dramatic amount of interest rate reduction, over the next 2.5 years. And then the Fed absolutely expects tariffs to increase inflation. And I'm sure that you will see, because when this quote happened during the presser, the market changed direction. So I'm sure it'll be reported by all of the media outlets. But basically, Powell said during the Q&A session of the presser, and I'm quoting, "There will be a meaningful increase in inflation due to tariffs." So he was absolutely acknowledging that regardless of what other people are saying, the Fed, so the Federal Open Market Committee, and him expect that we haven't yet seen the impact of the tariffs, and that by all accounts, no matter what the tariffs end up being based on the negotiations that Scott Bessent and others are doing, the Fed expects them to come in higher than was originally projected when they were doing their modeling last year and in the March timeframe. So the forecast for inflation in 2025, so the forecast for inflation in December of 2024 for 2025 was 2.5%. Then in March, they increased it to 2.8%. Now today, they increased it again to where they now expect it to be 3.1%. So, going in the wrong direction. That being said, following the Fed meeting, like I normally do. I watched a recording of Double Line Capital's Jeffrey Gundlach talking on CNBC to Scott Wapner about his what his takeaways were from the Fed press conference, and basically, I'm just going to not per se talk about his takeaways, but as much as his prognostications of what he thinks is happening based on where we currently are and what the Fed's doing. So, one, he thinks that if unemployment goes up to 4.7%, the Fed will absolutely cut and cut for the quote unquote wrong reasons, right? So it's going to be because we're getting, the economy's in trouble. And that they're definitely going to be, instead of worrying about inflation, they will definitely worry more about the other side of the mandate for full employment. He then went on to say that for every $10 increase in oil, and this happened to be because of the Israeli-Iran situation and what might happen to a global oil supply disruption. But he said for every $10 increase in oil, that translates into 0.4% increase in headline CPI. So therefore, keep an eye on oil prices. If we see them go up from in the $70 to $80, then you're going to see potentially a big jump in inflation. And if they go above 80 towards 90, even worse. Excuse me. He also expects gold to hit $4,000 an ounce, a troy ounce, because due to deficit concerns and other things regarding the U.S. dollar, while the dollar is now, declining versus other currencies, sovereigns and large institutional investors are buying gold as a safe haven for the valuations that it provides versus the currency depreciation. So he expects, again, gold to go up. He also expects, or excuse me, he also suggested looking at local currency emerging market funds in Germany, India, and Mexico. And he did that, again, because of the weakness of the dollar, and that if you buy equities or bonds, for that matter, in local currency in those markets, that you'll get, based on the dollar weakness, you'll get a much better return because it's not going to be in dollar denominations, but rather it's kind of juiced by the local currency and the Forex impact. So anyway, that was all the information regarding the Fed and the follow-on from Gundlach. And then my son sent me a text about changes to the Small Business Administration Hardship Accommodation Plan, which quite honestly I never heard of before. But he was asking me if I knew about it, which I didn't, and then what I thought the impact was. Well, anyway, we went back and forth on a couple of texts, and then finally I called him, and that led to an hour and 14-minute conversation where we talked about politics, generational differences, education, and so on. So it's always an interesting conversation, and I didn't expect to have it today while he was at work, but that's the way it ended up. Anyway, then my sister texted me and said that we're all set with the contractor, so she was able to get him to do what I needed. He'll be there on Friday, so all good there, so I'm happy about that. And then I didn't feel like cooking tonight, so my wife and I ran out, and again, it was raining like it's been for at least the last 4 or 5 days. Anyway, so ran out to Melon Mushroom. I picked up a holy shiitake pizza, and I didn't know that it was trivia night, so that was unfortunate, not because of the trivia part, but because the noise level inside the restaurant was, quite honestly, is like deafening. So I had to wait in between questions where we could talk. So it was, excuse me, it was problematic. But anyway, that's my update for today. So if you have any questions or any comments, please leave them in the comment section down below, or drop me an email at myretirementramblings@gmail.com. Otherwise, I hope you have a great evening, and until tomorrow, take care.